I'm going to explain to you what an asset hunter is and why I am an asset hunter as a real estate investor. Maybe a term you've heard, it's kind of our coin term for the year, and now we're close to the end of the year. But asset hunting is my strategy, and what it takes is a lot of experience. But I don't think you need all the experience to start as an asset hunter. The thing about being an asset hunter is that's exactly what you're looking for, assets. And when you're an asset hunter, you're less worried about the spreadsheet, although deal numbers are important. You're focused on exactly what is in front of you. And that's the tangible asset that you're buying. So whether that's self-storage, a mobile home park, a two-family property, a single family, an Airbnb or short-term rental type property, or anything else, your job is to figure out what is compelling about that asset, and does that asset have scale to grow? Whether that be appreciation, if you're buying a business, does that business have scale to grow in terms of bringing in more people, expanding the space, anything like that? And the reason I've come up with this term and why I consider myself an asset hunter is because I think that too many people are just crunching numbers. It almost becomes easy to create a spreadsheet or use somebody else's calculator and to just pump deal numbers in there. But the thing that you don't understand is that unless you're seeing all of those properties, those deal numbers are not correct. They're probably not even close half the time, to be honest. You're not seeing, you'll see, 10% cap rate. It's probably four. That's a pro forma, and it's also based on things that aren't realistic. So until you go and see these assets that you're pumping into a calculator, you're not really going to know what the answer is. So to me, that's just wasted time. Maybe on syndications, you have the data that's more verified. So it's pretty easy to look at what your return is. That makes sense. But still, they have all the data for you. You're relying on that. If you trust the operator, you don't need a spreadsheet. And the thing is, if you're not focused on the asset, what are you really buying? And how into it are you? Maybe you should just buy crypto or something that doesn't exist. Real estate is tangible. You can go touch it, you can improve it and add value to it. You can't really lose a ton of money on real estate unless you're over leveraged or made a terrible decision, based on data that was not there, and asset hunting that you didn't do. So out of state investing is a great example of a tougher bit of asset hunting, but you're still looking at what are the demographics and potential upscale of the area? Where's the area going with population growth, migration, things like that? If you have data like that, you don't necessarily need to focus directly on the cash flow of the property because you're betting on more appreciation. I've always been an appreciation type investor. I was fortunate I didn't need to focus on cash flow. I like both. Both would be fantastic. But again, when you're focused on the asset, you're looking about what alternative options there are. And when you're buying assets now, you want things that have alternative exit strategies. So that means you could do a short-term rental, you could do a midterm rental, you could do a long-term rental. Honestly, property needs work. You could turn and flip it. You could do a BRRRR model if you need to, and you need to focus on these things. Like with self-storage, you're always looking to see, is there extra land here where we can put more units? So if you can buy something at a decent price and they're giving you a pro forma cap rate, but then later you can go and add 20 units, that's an upscale that isn't calculated inside of a spreadsheet. So these are things that you have to look for, and that's why hunting is the important. Not a hunter, that's not my thing, but I like the terminology of asset hunting because you have to be out there. And it's not digging through numbers in a spreadsheet or pulling data off Zillow and putting 100 properties into something. That's not it. It's boots on the ground, looking at properties, looking at neighborhoods, looking at commercial areas where there's going to be redevelopment, looking at hybrid areas for mixed use where things are going to change and where you can get usability out of some of the options. This is what it means. So if you're spending too much time in your spreadsheet, you probably have analysis paralysis. Maybe you don't have the confidence yet, so it's easier to just pump numbers in. What you need to do is go to a bunch of meetups and pair that with podcasts and books. And the meetups are the thing that are going to help you see real people doing real deals, go out, look at deals together, find real estate agents who understand investing and can help you, like us at Streamline Properties on Market, brokered by eXp Realty. That's my on-market team, www.streamlinedwithad.properties/what we do. You can find out about our investor portal there. I hope this has been helpful. Think of yourself in a mindset shift. And that mindset shift is stop crunching numbers as your first thing and start asset hunting.